Okay, I wanted to make another video for you. Technical analysis. What is technical analysis? So you can make probabilistic forecasts of future price behavior based on price history. You find risk-defined entries and exits that a specular wants to be long or short. Primarily, we're working on being long. There's not any way to know the future price and behavior based on price history. In other words, technical analysis is a good risk management tool. So let's talk about candlesticks. This is really important, how to read these candlesticks, how to understand them. So candlesticks charts are a version of a price chart. You could have line charts, you could have, there's a ton of different types of charts. So, but this candle color, you've got your red or bearish candle. Your green is a bullish candle. Your candle body is a solid part of the candle. Your candle wicks, and I'll show you these. So you got your candle body. This is basically a red candle. This is the green candle. So again, bullish red candle. So this wick, this upper wick is the high of the price. So let's say this time frame right here is on a 1 hour chart. Okay. So this entire candle, wick and solid body of the candle is 1 hour. Okay. So this will tell you the entire price action for that hour. If it's a daily chart, this candle is 1 day. If it's a weekly chart, it's 1 week. And again, it'll show you the price action. So this would be the high. Let's say this is an hourly chart. So this is the high of the hour, okay, where this wick's at. So then this is where the bullish green candle closes, okay, because it's going to go up. The open is where it starts. The green candle starts at the bottom and opens. So this tells you where your price opened at. And this tells you the low. This wicks right down here will tell you wherever this stops at, will tell you the low of the hour. Bearish candle, basically the same thing. Only thing is it opens and closes opposite, okay? Because bearish candles move down, so they open at the top and then they move down and close lower. So again, your wicks gives you, so if you have this, it's the entire price action over that entire hour period, okay? So this is the OHLC, and I'll show you that in a second. It's open, high, low, and close. This is easy to see if you are, let me see, there we go. Okay, you'll see it right here. Open, high, low, close, OHLC. So if you were to zoom in on one of these candles, and you hover over it, these numbers fill in and it shows you this candle opened at 73.59. The high was 73.97. The low was 66.82. And the close was 6,700. So the close was where the candle stops. Okay. The open, remember, bearish candles open at the top. So the open was 73.59. The high is the high of the wicks, 73.97, and then the low is the low of this wicks, 66.82. Okay, so you can just hover over it, and then you'll get the high. So this entire price action went from 73.97 to 66.82. So it was constantly moving and whatnot through this. This is the daily chart, so this is a daily candle. So the entire day, this was the price action. Just to go back. So again, it's very useful when mapping out significant price levels. You've got your weekly open, your daily open, your high of the day, low of the day, precise high or low of a given move, whether the price closed through a level or swing point. So these time frames, again, we just talked about that. 15-minute time frame, one candle means 15 minutes elapsed during that time frame. These higher time frame candles, remember, they encompass. So if you're looking at an hourly chart, you could break down that candle into 4 15-minute candles if you went out, actually zoomed in to a 50-minute time frame. Or if you used 2 30-minute candles, again, would make up that hourly candle. So candle closes are very significant. A lot of times people are looking at these trades and they don't want to make a trade until they get a candle close. And so again, you're waiting until these bodies or these candles actually close and moves to the next candle. The beginners should focus on a couple higher time frames. Look at the daily. Possibly I look at a 12-hour or 6-hour, 4-hour chart. You don't want to get, and they call it noise, you don't want to get caught up in the noise looking at too much, too low, too short of time frames, 5-minute charts, 15-minute charts, 30-minute charts. That's like day trading charts. You really want to zoom out and look at daily, weekly. You're looking at the overall trend that way. Candlestick patterns. So there's a ton of different candlestick patterns. I post them all the time. Doji, swing high, swing low, shooting star, hammer, engulfing, tweezers. When it comes to the candlestick patterns, again, you don't want to use these solely to make trades on, but you want to have them come into play. So if you have a reversal candle, you want another indicator to work with it, your RSI, your MACD. So you want a couple indicators to work with the candlestick patterns to kind of give you more validity in your trade. Again, use higher time frames, zoom out. Conclusion, the key is really patterns can be useful, but only if they appear in the right context. So you constantly, these patterns are important, but again, there's so many other things that go into it. But over time, the key is you guys just get started, draw some cup and handles, some triangles, and everything else will slowly fall into place. It's kind of like riding a bike. You get on the bike at first, maybe you got training wheels, and that's okay. You just learn. But as soon as you really start to catch on, you're just off to the races. So again, drawing trend lines. So when I talk about trend lines, for example, this yellow line down here is considered a trend line, okay? You always want to trade with the trend. You really don't want to buy on a downtrend, because if you were, let's say you were buying dips and you thought this was a dip up here, you're buying here, you're buying here, you're buying here, all of a sudden you lost a ton of money. Wait till you get to the bottom. A lot of people are like, I don't want to miss out. You know what? You're not going to miss out. There's a ton of time left in general. These coins are not going to take off in a day. A lot, sure, do they pump like that? But yes, but again, if they pump at 100% a day or 50% a day, they're going to pull back, and you'll be able to buy the pullback. So again, don't FOMO. There's plenty of time to make sure you get in on this bear run, which hasn't started yet, obviously. So let's take a look at drawing trend lines. What are they? The trend, you have support and resistance, and we'll talk about that in a second. Patterns and channels. You want to have 3 touches along a trend line to constitute a valid trend line. 2 touches is tentative one. Ideally, these touches should be spread out along the trend line and not be clustered together. Longer lines are more powerful, and the price will react more forcefully to breaching them. Usually, time frame rules apply. Bigger time frames mean they're more likely to give valid lines. So the higher the time frame, the more valid whatever trend line you're showing, whatever. If you're drawing triangles, it just makes it more valid. The chance of it playing out is a lot higher. So again, you want to, when you draw them, you want to connect a high point to another high point, a low point to a low point. And then you try to draw them with the wicks, but there's not really a rule. Like some people draw with the wicks. Sometimes I'll draw them without the wicks. It's just really what gives me the better pattern or better triangle. So sometimes use the wicks. If you feel like candle bodies is better, you can do that too. Support and resistance zones are zones, not magic lines. These patterns and lines will never be perfect, especially in crypto. Never force a trend line that you feel shouldn't be there, but it just doesn't fit. Keep an eye out for trend lines that were broken. These trend lines are super important. So again, here you've got a trend line. This is showing an uptrend. And again, you can see 1 touch, 2 touch, 3 touches is what we're looking for. 2 touches is tentative, remember. And again, so you see this is a downtrend. You see it 1 touch, 2 touch, 3 touch, and then it breaks out, okay? So again, that's next Saturday night. Just had it in the files. Let's see, real quick on drawing some support and resistance. Let me go over this real quick because this is huge. Let me see. Okay, so if we were to draw support on this or resistance, okay, you can see candle bodies with resistance is typically the way I go. So, and you can go with Alt H, and it will draw perfect lines for you across. So You want to look for resistance points in the past that come into play in the present or the near, near past, I guess you'd call it. You want to look at 5 days ago, 7 days ago, a month ago, these points, and then points where it comes into play now. And what I'm looking at is this. So you basically looking at this little line here, and you want to find, okay, so here's one. You can see it touches here, and so it probably is going to go back here and touch there. There might be a few other touches. Okay, so there's also a bunch of resistance here. You see how this is coming up and hitting it, how this is coming up and hitting it, this is coming up. So again, we've got a lot of resistance there. You come down here, really there's a whole bunch of resistance, and sometimes I'll go and I'll just draw a rectangle because there's really just a ton of noise. There's just a ton of support in this area. Support on the way down, resistance, and you can see we broke it. Even though there's all this support and resistance in this area, we broke through violently, and it took a lot to break through. Okay, but it happened. So there's a ton. So you could call this a support zone when the price action's up here, and it would be resistance when the price action starts coming up. All of a sudden, it's going to be hard to break through on the upside. Okay, so when this price is trying to get up here, it might get rejected, might bounce off and come back down and come back down. So let's just look at another chart real quick. Let's look at the 4-hour chart. And again, this comes into play at the tops of these run-ups a lot too. And you can see they just get rejected. So everybody's worried about, all this support back here, or resistance technically. If it's on the way up here, see how these candles stop right here? All right, that becomes resistance because they hit into it and couldn't pass it. And so you'll go back and you'll see, okay, so this point, it was resistance because it was trying to go up from here and it got knocked back down. Well, you can see here it's resistance, here's resistance. You can go back in time and you can look, and there's all this resistance or support. Again, coming down, it becomes support and bounces off of it. So these lines really give you an idea. Okay, so again, this comes up here and can't break through, comes up again, can't break through, so it attempted a couple times and then it broke lower. So it was resistance at this point, and then you can see here it's resistance too. So again, you're constantly marking these, and you'll see this price action just kind of bounce back and forth within this price action. So I was looking at basically an ascending channel possibly that was forming on Bitcoin. So we'll just see if we can draw something. Possibly an ascending channel, really. Okay, so you want parallel lines. And now you have to assume that we've been bouncing back and forth in between this channel. So you have to assume we continue it. So you basically, if you're looking to buy, short-term buy, you could buy here. You have to assume we break higher. If we break out, if we break lower, then you just have to, have your stops in place. If we break higher, obviously that's good for you, for the bulls. Also over here, you see this is a 4-hour chart, and you'll see this is the candle. We're at 3 hours, 51 minutes until this candle closes, talking about this specific candle. Okay, so it gives you a countdown. So when people are waiting for this candle to close, that's what they're waiting on, this time to run out. So again, just wanted to, I know it kind of went over a lot, but I definitely want you guys to just jump right into the market. I promise you, like once you start going over this, I want to see some people posting charts, asking me, hey, what do you think of this? I promise you, the single biggest thing that changed what my portfolio looks like, patience is probably up there with number 1. Number 2, technical analysis. But patience in this game is really the key. Technical analysis is right behind it, So fundamentals are important, but I'm telling you, technical analysis and patience more important. You guys have a great day. I appreciate everyone's support. Take care.